Is this P-shaped volume profile shape bullish or bearish? Now, today's video, we're gonna be talking about the P-shaped volume profile. And if you look at this, we can clearly see right here would be the pull, and then right around this area would make the P as in Paul shape profile. Now, with this profile shape, what does it actually indicate to us? Well, one, it can indicate a short covering rally. And you can see right here, market starts breaking out. Shorts that were short before start to cover, and we build volume near the upper part of the range. So how do we determine if this profile shape is actually going to be bullish or bearish? So if we come over and we scroll out the very next day, which this is today's trading action, we can clearly see the market went down from this volume profile shape. Now, were there any clues to tell us this ahead of time? And the simple answer is yes. Whenever I look at a P as in Paul shape profile, one thing I want to look at is where the upper part of that profile shape is, where the most of the volume has been built out. I want to look at that area. Now that's going to do two things for me. If we start breaking below this lower area, it's going to let me know, watch out, we're likely going to go lower. And we're talking about where those lower price targets are here in just a few moments. And then two, if we start breaking above the upper edge of this volume profile, then I'm expecting the market to continue higher unless the market was able to break above this area and then start coming back down. In that situation, there's another way that I like to trade the P-shaped profile. But let's talk about the first situation first. You can clearly see we started breaking below the distribution area. Then you're probably wondering, all right, Mike, I know that this is bearish now, but where are the targets going to come into play? Well, one of the tools that we can use is our Fibonacci retracement tool. Most trading platforms have this tool. I'd want to measure from the high all the way down to the low. And that's always going to be the case when you're dealing with a P-shaped profile. You're always going to start at the session high. Now, when I start looking for potential targets to the downside with a P-shaped profile, one of the areas I want to start looking at is the 38% retracement and a little bit lower. Anywhere around that 38% retracement, I want to start looking for structure areas in the market. And we can clearly see right here, we had a candle body to the candle wick, structure area that the market broke out from on this candle. We closed above that structure area and the market had not been back to visit that area. So once we started breaking below that distribution area of the P-shaped profile, we knew this was a very high probability target. Now, if you were to just simply play this with no other technical factors or entry points, and you simply said, I'm going to enter the market as we break below that area, and you're going to target the upper part of that structure breakdown point, that's a potential 111 points. Now, if we wanted to go ahead and also measure from that area to the high of the day, you can see it was roughly 88 points. So if you had your stop way up here, you would still have a positive reward to risk ratio. However, one of the things I would have preferred to do is simply put my stop loss somewhere on the other side of this point of control. In that example, we can now turn that 111 point potential profit with a stop loss of only 52 points, which then would give us a 2-to-1 reward to risk ratio. Now, that's one way that we could trade the P-shaped profile. Now, let's talk about the second way real quick, and that would be, what if the P-shaped profile was bullish? Well, you know what? We're in luck. The day right before that, we also had a P-shaped profile. And again, the key point that we want to focus on is the main distribution area of the profile. Now, if we're looking for lower targets, we're looking for the lower third of the range. And I probably would have aimed right over here towards this structure area right here. We can see the market broke down from there and was able to recover back towards that area. But if you notice, if we were to draw a white line somewhere around the lower part of this distribution, did the market ever go below that area on the following day? It simply did not. So guess what? Heads up, we should not be looking for sell side trades. The path of least resistance is higher. And the next day, we most certainly went higher, once again, forming a P as in Paul shaped profile. So once we start breaking above the upper part of that distribution area, from that point on, I really want to be looking for longs. However, there is a caveat, because if we look at the top of that area, again, I'm going to draw a horizontal white line across the top of that area. Anytime we get above that area and we start coming back down, automatically, I want to start looking and say, okay, is this going to be a rejection? Meaning we look above and we fail and come back down. If that's going to be the case, once we start getting back down below the upper edge of that P-shaped profile, then I want to look to start to target that point of control. If we can break that, then we start to target the lower portion of that P-shaped profile, of the distribution area of the P-shaped profile. Then anything below that, that's when I would turn my attention down towards the lower third of the range. Now, that was on the NASDAQ. If we come over and look at the S&P, What did the S&P have today as well? It had the very similar situation. Right here would be the P-shaped profile right there. You can see the letter P. And again, we trade that the same way. Once we got below the lower portion of that distribution area, guess what? We're looking for sell side trades. Lower third of the range, well, right down here is the structure breakdown point. And just to confirm that would be the lower third of the range, we grab our Fibonacci retracement tool, measure from swing high down to the swing low, and notice that would be below the 38% retracement. So that would be roughly in that 30 percentile range. That would have been a logical target. Now, if we zone that out from candle body to the candle wick, look where we came down to today, right down towards that area. Now, can you guess what type of price action occurred after this quite large P as in Paul shaped profile actually formed on this day? Now, before I go ahead and show you guys the answer for that, I want to let you guys know right now, prop firms are having amazing deals out there. Apex Trader funding, 80% off all evaluation accounts. My Fund and Futures, 50% off first-time users. Tradeify, 50% off first-time users. And 35% off reoccurring purchases after that. Use promo code Mike. If you guys want to trade with a prop firm with the best payout policy out there, Take Profit Trader right now, 40% off all the evaluation accounts. Best yet, no activation fee. Take advantage of these offers. Use the link in the description box down below. So now let's go ahead and role play this out real quick. Let's map out the lower portion of this distribution area. Let's map out the upper part of the distribution area. All right. So now we have our range. So guess what? We already have a plan in mind. And just so we don't go ahead and cherry pick this real quick, let's go ahead and just in case we start to break below the lower portion of the distribution, let's go ahead and map this out. Let's grab our Fibonacci retracement tool, measure swing high all the way down here towards the swing low. Now look at where the lower third of the range is going to be for the day, right down in this area. So somewhere in this area, I'd want to start looking for structure areas in the market. So we can either use right here, candle body to the candle wick, or a little bit below that area right here, candle body to the candle wick. Well, now if we go ahead and we scroll forward real quick, let's look at where the market actually came down towards. If you look, right down there, tagged the 38% Fibonacci retracement level. So if we zoom this back out, that structure area that I shared with you guys moments ago is exactly where the market came to. Now, we talk about this all the time on the live stream. If you guys don't want to miss that next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. And quite often during the live streams, we have prop firm accounts to give away. So now you're probably saying, Mike, that has to be a fluke. Well, let's go look for another example. In this example, so now let's go look at another example. We're going to jump over to the S&P 500. Here's a P as in Paul shaped profile. You can see the market close near the upper portion of the range. So let's go ahead and do the role play this out once again. We're gonna grab our Fibonacci retracement tool, measure swing high all the way down to the swing low. If we look at where the lower third of the range actually comes in, it's gonna be right near this area here, which we have already tested that area out, but we do have a widespread candle right here. So I would still probably use somewhere in this area as a potential target, maybe as low as candle body right up here to the top of this widespread candle up here. Now, if we zone out where we're looking to be bearish and where we're looking to be bullish, right? So we have our horizontal white lines mapped out. Now, just to clean up the charts, I will remove the Fibonacci retracement tool. So now on the following day, look what we get right out of Asia. What do? We break below the lower portion of that distribution area. We quickly go right down towards our target area. And guess what? The market's an overachiever and it continues to go ahead and trade lower. But guess what? We already knew ahead of time. If we break the line in the sand, we are looking to be on the sell side of the markets. Now, if you want to learn how to trade the D-shape volume profile shape, which is part 1 of this video series, then you want to make sure to watch this next video right here.